Hey YouTube, good morning everyone. Good morning traders. I hope everyone's having an amazing day today. It is Friday. We're going to wrap up the week today. And there was some news that came out here both pre-market and after hours yesterday that I would like to talk about. There's nothing crazy going on right now in terms of Fed and macro stuff that is new at least. Um, we're mainly going to be talking about the tech names, right? Netflix and Google, and what my outlook is on the general overall market today, and give you some insight on where I think that things might go into the next leg as we get ready to wrap up the week and come into the weekend. So, Netflix reports earnings yesterday. I'm just going to check the name right now because yesterday it was up very heavily after hours. It was up about like 7% or so after hours. Now it's loading. And it's still sustaining some of the gains, right? We closed out the session here around the, let's see. I believe we closed out the session like in the three 20s or so, and then we got a pretty big spike closer to 345, 346, and right now this thing's trading at 335. So kind of consolidating up, still gapped up on this name. So it's up a decent bit from yesterday's close. Sorry, 315, I should say. And we are up about 6% right now as things stand because we did cool off from the peak of yesterday's move. So we officially closed the gap of the earnings period that was April 2022. So in April 2022, we had this massive earnings gap drop that has now been closed after 2 or 3 consecutive earnings periods that have gapped up on Netflix. So it's up quite significantly from that low of about 165. And there's a few things to mention with that. There's a few things to mention with Netflix here, as we had a pretty strong run last year around that 700 region. Excuse me. So Q4 earnings report, where the company easily beat the streets and management expectations for subscriber growth. That was the main figure number that really helped this thing out and narrowly cleared the bar on its newfound top focus of revenue. So revenues grew about 1.9% year over year to about $7.85 billion. And the company added a net 7.66 million subscribers globally and hit 230.75 million subscribers in total. That's 70% higher than the 4.5 million added net ads expected by the company, while the street was even more cautious, forecasting 4.1 million of ads. So some commentary, subscriber growth is accelerating once again, and the stock is up about 30% since its last reported earnings quarter, which was in October. And we can see that Netflix deployed its ad-supported streaming tier in the middle of the fourth quarter, coming to an opportune time as it increasingly prices in sensitive consumers amid a tightening oh my god, I'm sorry. Amid a tightening financial conditions and a looming economic downturn escalate a churn risk. So, however, looming macroeconomic headwinds and wider rollout of paid sharing beginning Q1 2023 will likely weigh on Netflix's normalized profits that are further to be expected. And the company will need to prove itself again as streaming rivals Disney come after its market share. So Netflix still down over the past year or so. And there's also new leaderships that is set to take control as Netflix co-founder Reed Hastings steps down as a CEO but stays on the executive chair. And Hastings has been at the helm since 1997 when the company was renting out DVDs by mail, but later transformed the company into the world's most dominant streaming service. So the succession plan has been in the works for this past several years, with Ted Sanderos, previously Chief Content Officer, becoming CEO in July 2020, and CEO Greg Peters, who was a key player in the ad-supported tier, is now finally getting promoted to the top spot. So we see that the new CEO had sparked some of this upside as well. There's a lot of new things that are perceived to be as good necessarily coming up out of this Netflix earnings report. So we're going to see how far along this lasts, because Netflix has been on a decent upturn while the market has recently looked to kind of pull back down. So that's one of the names that you could watch today if you're trading 0 days, or if you're looking for some kind of swings into the weekend on Netflix. I personally probably won't be. EV's going to be very high if you're trading options. And then Google is another big tech giant that reported some interesting news this morning, laying off 12,000 employees, about 6% of its workforce, adding to a slew of major tech companies, US tech companies, cutting jobs amid fears of an oncoming recession. Realistically, we are already in what we call an oncoming recession, and we're seeing a lot of those data points, especially retail sales and industrial growth, really, really taper off. So this is the turning point. I think that a lot of economic news starts to catalyze some of this downside. And as we see further job layoffs, that further enforces that thinking. So these are important moments to sharpen our focus, re-engineer our cost base, and direct our talent and capital to its highest priorities, said Sandra Pichai, CEO, wrote in a memo. And the fact that these changes will impact the lives of Googlers weighs heavily on me, and I take full responsibility for the decision that led us here. Besides downsizing their workforce, Big Tech is standing united on protecting Section 230 at the Supreme Court amid several cases centered around online speech. Now, this actually prompted Google to soar. Let me see. I don't know how many percent. I don't want to lie to you. Pre-market, Google is up a pretty hefty bit here from about the close 93 up to 95.60. 3%. So it's up 3%, a pretty nice move. It's coming into a pretty key resistance point here. So we're going to see how this thing acts throughout the day. But why is it up if it's cutting 12,000 employees? Well, you're getting a increase in the net, right, profits. You're looking for a net return that's going to increase after you cut that many employees, right? Because you're no longer paying those larger salaries. Realistically, some of those Google salaries are going to be pretty high, and it's done this before in the past, where a lot of the added jobs were pretty much based off of the QE from the Fed over the past few years. So this cost-effective, cost-cutting balance here is going to help them kind of ramp things up, and that's why necessarily that Google has risen about 3% here pre-market. There's not too much else to talk about, right? Credit Suisse's global team asks, what if we're wrong, looking at a broad spectrum of base case scenarios and market calls, led by analyst Andrew Graithwaite. Analyzing the risk to those assumptions while laying out about 10 market surprises for 2023. So they've been predicting oil movement, right? S&P, gold, war in Ukraine, and realistically, you don't really know what this downside is going to look like, whether it's a softer or hard landing until it necessarily happens. But reality of it is we're creeping into something that has a little more downside. Where will it bottom? How will it bottom? Nobody necessarily knows. And Credit Suisse is on the brink of doing something else. So that's a different matter all in its own. But I want to take a look at some of the levels here with you guys today, because we are coming back into some key areas. So I want to talk about some gamma or mainly gamma hedging based on market makers positioning. You have the 390 region. You also have the 388 region, which is on the SPY. If we translate those to the S&P 100 futures, translates to 39.31 as well as 39.09, right? That's a massive range. Well, not so massive, but it's a fairly large range where we can identify about a 20-point mover and expectations of market makers trying to position within that area. Now, a break of either of these regions will result in a longer leak to upside or downside. And realistically, we've already held the 31 area twice tonight, and I like that as we're opening up a little more sentiment for the bear side, which I'm leaning a little more bearish today, right? I would like to see the close under 38.96, 98, that area, right? Because that opens up the downside for a distribution block that is much lower for the price. So, excuse me. I like how that's shaping up. I'm going to lean a little more bearish, but you have to watch the 39.09 area very carefully. I'm also watching the 25s, right? That's an intermediate area as well as the 16 region on the futures. But keep in mind those two levels that I talked about and look for some of that resistance to actually hold out for those rejections. Having said that, I want to wish you guys a happy weekend. It is Friday. We have the weekend coming up. We have OPEX today, I believe. I believe it's OPEX today. So that's another thing that you have to worry about. So be careful trading those. And next week we have a full week. This week wasn't a full week. So I hope you guys are ready for that 5 trading days. And we'll see. We're almost done with January, right? We're almost done with January. We have like a week and a half left in January. So time's moving fast into February, into the second month of the year. And we'll see how that shapes up. So thanks for watching, guys. Have a great weekend. And I'll see you guys next week.